All right, looks like I'm good. Thank you.
All right.
All right, guys, it's 12 o'clock. About to get started here on this week's webinar. Just a few seconds. Just wait for any laggards to jump in. All right, let's get it started. So this is this week's Prop Trader Market Update, hosted by yours truly, Derrick Goldsmith. Quick disclosure here, I'm an associate member of T3 Trading Group, which is an SEC registered broker, dealer, and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Quick position disclosure. So at this time, still pretty much long across the board. Did short a little AMC earlier today, so I've got that on just as a little bit of a trade. And that's it. Besides that, market's basically at all-time highs, so long and strong has been the easier money in this market environment, and that's primarily what I've been focused on. So about me, obviously been doing this webinar every Tuesday for about a year now, so most of you probably know me. But the biggest thing, the biggest update on my end is I'm back in New York. Been here for a little over a week, getting used to seeing a whole lot of people instead of a whole lot of horses and cows. But it's good to be back. It's good to be getting that good food again. It's good to have that view over my left shoulder of the Statue of Liberty. And it's good to be talking to everyone from New York again. So I'm senior trader and registered principal here at T3 Trading Group. I've been with T3 really since 2010, licensed since licensing was a requirement in 2011. I've mentored well over 100 professional traders of the company, currently managing a group that's, I believe it's over 100 at this point also, definitely in excess of 50. My spare time, I'm big into traveling, martial arts, skiing, and obviously markets. So if any of that interests you, my email address is going to pop up soon, and feel free to shoot me an email, and I'm always happy to chat with anybody about any of these things. So with that said, let's go into the charts. Let's talk about what's been going on with this market over the course of the last week. I see SPYs are getting a little bit of an uptick over the course of the last 10 minutes as we started our webinar, but let's go big picture, because people know everything I do starts from the big picture and then works its way down to the small picture. I'm a big believer insofar as understanding probability in the marketplace, that the big picture tells you what direction you want to be focused on, and the small picture tells you the how, the when, the why, how you're managing risk, how you're building out that game plan for reward maximization. That small time frame is where you come up with your risk reward. But the big time frame is a huge part of probability. So where is the market? Well, here's the SPY, right? ETF that represents the S&P 500. Where is it? We hit all-time highs yesterday. So market has been in a bull trend. We've been grinding higher. We've been working higher. And even though the price action's been kind of grindy these last couple of weeks, still the easier money, without a doubt, has been to the long side of the market with the SPYs at all-time highs. What about the NASDAQ? NASDAQ was very weak in the beginning and mid part of May. Just about had a technical correction there when we pulled back from all-time highs in May to, towards the end of April, we were at all-time highs here in the Qs at about 342, all the way down to 316 just a couple weeks later on that big pullback. Where are we? All-time highs. Once again, all-time highs. NASDAQ hit all-time highs yesterday, 3 really big up days in a row, led by FANG. One of the big things I've been pointing to with this market environment in 2021 has been understanding relative strength, relative weakness, and money rotation. Understanding money rotation has really been the key to success so far in the year 2021, because that money rotation has been constant. And by the way, that's one of the signals of a bull market, is constant money rotation. If the money's not getting rotated into the small caps and the mid caps and the energy names and the reopening names, then the money's getting rotated into big tech, or the money's getting rotated into material names. There's been constant money rotation almost every day, every week. There's something that's been relatively strong. For a while, we had tech take a back seat to energy, right? We can look at the XLE. Energy just been steady. To material names like US Steel. US Steel has taken a big hit the last couple of days. You can see here actually in FCX, a lot of these material names and commodities in general are getting hit really hard. So right now, this is not where the relative strength is. This is where the relative weakness is. But for a lot of this year, relative strength has been going back into those reopening type trades, which again is your energy. The biggest thing that has changed this now over the course of the last couple of weeks here is what's been going on with interest rates. Interest rates have now been going back down for I think a couple weeks in a row. Big move to the upside in TLT just a few trading sessions ago. That means lower interest rates. What is that good for? Lower interest rates are good for tech, not good for financials, not as good for energy, right? So this has been one of the big stories, obviously, that's come about in the last couple of months, is analyzing inflation data. And what do we have tomorrow? Tomorrow we've got a big day. We've got the Fed. So my expectations really for today's market was to kind of do nothing. So it makes sense that the SPYs here, it's, where are we right now? SPYs are down 1/4%, Qs are down 0.5%, and the Russell's down 0.9%, so the Russell's where your relative weakness is. But we had this interesting rally in the last 30 minutes of the day yesterday in the SPYs, brought on by some talk of further infrastructure, and that's just kind of led to a nothing day today. We've just been grinding lower, trading back and forth. Like I said, we just caught a bid here for the last 10 minutes in the SPYs, but nothing going on. Why is there nothing going on? Because it's very often that nothing is going on the day before a Fed. Maybe this should be the Thursday webinar instead of the Tuesday webinar, because if we're doing this on Thursday, I'd probably have a lot more to talk about than I do today. Because right now, the market, and honestly myself and a lot of the traders on my team, even though we're trying to find spots to trade relative strength and relative weakness, we're finding spots to trade some of these meme stocks. As far as the market goes, it's kind of hands off right now. We got to wait and see what the Fed says. Are they going to starting to talk about tapering? I said it like that deliberately because that's exactly what the Fed's been saying. The interesting part, though, has been that the last couple of times that T word, that taper word, has been brought up, the market's actually handled it really well. One really important day was back here on May 19th, where the tapering word was kind of mentioned in the Fed minutes for the first time, and we closed on highs. That was a big signal for me and my team to start getting really bullish with this marketplace. And since then, that's been an absolute low, and we've just been continuing that steady grind higher. So again, so far an inside day here for the SPYs. Really not too much to talk about. Markets in wait and see mode for the Fed. As far as individual stocks go, obviously relative strength and relative weakness has been key. So Apple. The trade of the day for my team was Apple through 128. 128 had become this really big resistance level, and Apple was actually kind of the laggard for the FANG names. Tech started to wake up, the Q started to wake up, Amazon started really going here, which we also called out on June 8th. And since June 8th, I mean, just a huge move here from Amazon, almost $200 to the upside. Microsoft started going at the same time. The same thing here, starting June 4th, Microsoft really woke up and it's given a huge move back above resistance levels. But Apple just didn't seem to want to participate. Apple, started to go on the same day that Amazon and Microsoft went, but a couple of days later, it ran into that resistance at 128 and failed. And then a couple of days after that, which is here on June 10th, it got to that 128 resistance and failed. Then 2 trading sessions ago, it's set up with an inside day and up through 128 resistance. You can even see here in the beginning of the day, yesterday's price action, the 5-minute, the first bar here just about ticks 128, fills the gap, and then the bulls come in and they rush after it, really breaks through 128. I bought 128 here. A bunch of the guys on the team and gals bought 128 as well. Just a really great technical setup on the third 5-minute bar of the day in Apple for about 40 cents risk. That 40 cents risk has given, so far over $2 worth of reward, and that a lot of this became a swing trade because Apple closed so well. Can Apple get back up to these next resistance levels? I think you got a lot more resistance at 132, so that's kind of my more shorter term target right now for Apple. But honestly, the Fed announcement tomorrow takes everything off the table. When you're in a win-win situation, like we are with Apple, and you're a couple dollars in the money, then you want to be greedy. You want to go for reward maximization. You want to have strategies and rules in place so that the trades that you're involved in that are working for you, you're putting yourself in the position to really maximize those rewards. So I'm sticking with the trade, but who knows what is going to actually happen tomorrow when the Fed announcement comes out. Interest rates are going to move, obviously, and depending on the movement of interest rates, which is going to depend upon what the Fed actually says, maybe we start seeing further strength in tech and further weakness in financials, or maybe we see the opposite. Maybe if interest rates pick up, financials pick up, and tech, which all of a sudden these FANG names have been such a boon to the market, really helping to hold the S&P up and obviously boosting the Qs into extended territory into all-time highs. Maybe that changes after the Fed tomorrow. So it's all kind of a little bit wait-and-see mode right now, and I have no way to know what they're going to say. All I know is that I'm happy for the most part with my positioning into it. It's been a really good few weeks of trading for myself and the team, and at this point we're kind of just wait and see. Some of these meme names, I traded the CLNE yesterday, but it closed pretty poorly, so I got out of it for a little bit of a profit. We've been looking at this YOLO Stocks Live website to see what's getting the most amount of mentions. Today Wish is number 1, AMC is number 2. AMC actually broke a big $60 resistance level today. I put on a small short in this thing. I'm not too heavy in it. It's one of these things where, in theory, I really want to be I really want to be short AMC because I think the stock is worth about $2. In practice, you got to be very, very, very careful trying to short any of these meme names. Anything right now that is highly shorted is just on the list of potentially get your face ripped off if a squeeze starts because all the Wall Street bets money starts pumping into it. With that said, AMC in 3 trading sessions has gone from $40 to $65. So it's a huge move. It's now very extended on the daily chart. So with the stock trading at $65, the ADMA is at about 52. So you got a $50 stock. It's extended by $13, $14 to the upside based off of the upper band of equilibrium. And for me, again, for people who've been following my webinar every week, most of you know I utilize an 8 and 21 EMA as the space that I represent as, I see somehow this moving average moved, let me fix that. So the space between the 8 and 21 EMA is what I consider to be technical equilibrium for any stock that I'm looking at. Hold on, just fixing my moving average here. Somehow it moved on me. There we go. Again, 8 and 21 EMA. So the space between the 8 and 21 EMA is the space that I consider to be technical equilibrium for any stock or any chart that I'm looking at. So right now, AMC put in a high of almost $65 with the upper band of equilibrium at 51.50 and the lower band of equilibrium at 39. So there's a lot of room here for a technical pullback. But the thing about momentum is that when you see a stock that's extended, but it's got momentum, it's got news, it's got volume, it can become significantly more extended in a short period of time. I mean, look what just happened back on June 2nd. It was completely insane. Stock put in a low of 35.60 that day and a high of 72.62. And then the next day, pre-market, it was at 77 before coming all the way back down to the ADMA on the daily. So this stock has been completely nuts. I have a small short position on it from a little bit earlier. So we'll see if I'm able to get some sort of pullback on it. And obviously, I really got to make sure I'm managing my risk in case I'm not able to get it. Hopefully, I'm not making too many Wall Street bets, people angry at me because I'm on the short side of the market, but hope they realize it's just a little bit of a trade, and I've been long plenty of the other ones, right? I was able to catch that sundial we were talking about here as a group right before it went, coming in at 75 cents for looking for a 100% move, and we basically got that. That was my game plan. Buying this thing, looking for a move to $1.40, basically sold my position at $1.40. So I got to be involved in that one for a nice little move. CLNE, again, I just mentioned I was trying to be involved in this yesterday, but I couldn't get any follow through on it. Bed Bath & Beyond, I'm long Bed Bath & Beyond. Obviously this one's been pretty weak here, but I was long through this move, made really good money on it, so started to piece back into this one here. This is one where, I'll be honest, as opposed to AMC, which I think is a garbage company, but obviously there's a lot of hype behind it. Bed Bath & Beyond, I think, is a legitimate company. They've got a strong stock buyback going on, and this is almost the opposite. This is pulled back now from $40 to $28 over the course of 5 trading sessions. So see if this one's able to give some sort of signal to potentially get heavier on it to the long side. And that's pretty much where we're at, you know, trying to force some cash flow for ourselves in a market that's otherwise a little bit boring right now as we wait for the Fed announcement tomorrow, and just looking at some of the names that are showing relative strength and relative weakness, because that's been the key to 2021, and looking at some of these names that have been the meme stocks that are giving good volatility, giving good risk-reward ratios on trades to be able to come in and make some extra dough. So I guess with that said, I'll jump right back over to the little presentation here to talk about how you can become involved with T3 Trading Group as a professional prop trader. So some information, T3 Trading Group is one of the largest prop trading firms in the United States. We have hundreds of licensed professional traders here. We've got, at this time, 4 physical offices, including our Manhattan headquarter office. With that said, none of our traders are in offices yet at this point because of the COVID situation. Everybody's been working remotely, utilizing our virtual trading floor, specifically the Pro Desk virtual trading floor, because that's where the pros are hanging out. And it's gone so well remotely that we are honestly in no rush to bring traders back into the office. So you could be a trader from anywhere in the entire United States, or Puerto Rico, or the Virgin Islands, or Guam, or any of those, whatever the right term is, territories, and be a trader at T3 and have the same experience, the same information as if you were coming to one of our offices by being involved in the ProDesk virtual trading floor system that we've created. If you want to become a professional trader, you have to go through professional licensing. T3 is a registered SEC broker-dealer and member of FINRA/SIPC. So again, that just means everybody has to get licensed with an SIE, Security Industry Essentials, and Series 57 examinations. We sponsor for the exams, we provide study materials, so it should be no problem to be able to pass those tests, though they do require a little bit of studying, especially if you've never taken one of those tests before. Once you've got the exams passed, then we can get started with training and trading and all the good stuff. We have, at this time, 4 different trading software options available: Lightspeed, Sterling Trader Pro, and Wolverine, also known as WEX. Personally, I've been using Lightspeed for over a decade. I love the software. Sterling Trader Pro is great as well. It's actually created by the same company who also owns Lightspeed. And for anyone who doesn't want to deal with licensing, well, T3 has retail accounts available as well, and the software for that is Sterling Trader Pro, standard margin retail accounts. As far as asset classes, at T3 we trade equities, futures, equity options, and options on futures. Again, any of these different asset classes interest you, reach out to me. My email address will come up again at the end. Personally, I'm equity focused. I've been an equity trader for over a decade with the company. That is 100% my focus. I do not actively trade futures or options. And really, as far as options go, honestly, if I was on a retail account, I probably would be an options trader because of the natural leverage that's inherent in the product. But as a professional prop trader at T3, T3 gives me all the capital access I could ever want. So my thought process is, someone who's primarily a directional trader, is why do I want to deal with options which suffer from time decay and are much less liquid than the underlying equity, just for capital access, just for leverage access, when I already have as much leverage as I could possibly ever want? That's always been my thought process. With that said, we do have professional options traders at the company. They are primarily focused on certain trading strategies, complex trading option strategies, or if they do a lot of swing trading, maybe they sell covered calls on those options. So if any of that is interesting to you, or that's what you focus on, reach out to me. Happy to discuss details. New traders should be aware that this is a great place to get started because of all the free access to training and development that you're going to get. As a matter of fact, one of the biggest things I pride myself on is how far I've personally advanced T3's training and development. We have a 1-month training program for when new traders first get started that consists of a series of lectures. Since COVID has hit, I've turned all those lectures into video lectures, so you can access those from anywhere in the world. I do a daily morning meeting through the Pro Desk every day at 9 a.m. Eastern before the market opens, where we talk about big picture game planning all the way down to individual stock ideas. Then we have an afternoon meeting at 10 after 4, Monday through Thursday, right after the market closes. The afternoon meeting is very heavily focused on education. It's obviously a review of what the market did that day. What I'm trying to do very specifically in that review is draw lessons from what the market did that day and from what individual equities did that day, so we can all learn on more or less a day-to-day basis. And every single afternoon meeting ends in a group Q&A. So that is an opportunity for any trader who's on the team, regardless of experience level, to ask any question that you have about anything trader related. And I will sit here and I will answer questions all day and all night until we're able to get the job done, because my goal is to maximize the success of the traders that I'm working with on a day-to-day basis. You will have to fund your account with a capital contribution. The amount you want to fund your account with is for the most part up to you. We do have some minimums. What we do on our end is we start by providing you capital access, typically at 20 times your contribution for equity day trading and 8 times your contribution for overnight positions. So basically, someone who puts $50,000 into an account, we would give you access to $1 million for day trading and $400,000 for overnight positions. And thanks, Ben. Just seeing a Ben here from, a message from Ben that he sent me an email this morning. A little bit behind on my email just because I'm managing a lot of traders, but I'll definitely make sure to get back to you by the end of the day. So, again, this is pretty much how things work as far as funding goes. So you want to be a person who is trading with $1 million, all you got to do is put $50,000 into a prop account. And then if you're an experienced trader, well, we're also a great place to be because of T3's scale. We have a lot of capital access. So if you are someone who's an experienced trader and you want to put a couple $1 million into a prop account because you want access to $40 million, no problem. Reach out to me. We can definitely work with you on that as well. Here's my email address again in this slide. Oh, and you get all this other free stuff. You get Pro Desk virtual trading floor for free. It's $2,000 a year. That's the room I'm running. You get my training program classes for free. I think they sell it for like $800. You get Scott Redler for free. You get his Trader Hub room for a couple $1,000 value. You get the Redler All Access for a $1,300 value. Why are we giving away thousands of dollars worth of stuff to traders for free when they're opening an account with us? It's very simple. It's very simple. We want you to be successful. It's a win-win. The incentives of incoming traders here at the company and the incentives of the management at T3 are in line. If you are successful as a trader with us and you are making money, you're happy, and your account is also making T3 money. It's really as simple as that. It's a win-win situation. So if we can give you some free upfront access to training and development that normally could cost you thousands of dollars, we're going to provide that, because if it makes you successful and you become the next T3 trader who's here for decades like I've been, well, again, it's a win-win situation. So here's my email address. Reach out to me. Let's get things started. Again, a little bit of a shorter webinar this Tuesday, just because I'll be honest with you, every week I'm trying to impart lessons to you guys on a day-to-day basis that you can implement into your own trading. But really right now we're just kind of in wait and see mode with the Fed tomorrow, so there wasn't really as much to talk about from a market perspective. I see a couple of questions here coming into the YouTube from Ben. What is the capital allocation per trade? One is allowed to trade with. That's up to you, Ben. That you have the capital allocated into your account, and you can put it where you see fit based on risk reward. The capital allocation numbers I mentioned of 20x and 8x are on the equity side. Options, we usually start a little bit smaller because we want to get a little bit comfortable with your strategies from a risk perspective first. So usually we would start options at 5x. And then again, if you're implementing some sort of strategies that are buying power intensive but maybe more risk neutral, we can actually increase those ratios very quickly. The numbers I spoke about, those are not hard, fast numbers. We have some people at the company who have access to significantly more than 20x for equity day trading for the strategies that they're implementing. But usually that's because they've been with us for a long time. We have a strong relationship with them. We understand what their approach is like. We understand the risk of what they're doing. And the number one thing that we need to be really focused about here at T3 is risk, first and foremost, for everyone's benefit, for both the trader's benefit and for the company's benefit. So we're focused on risk first and foremost. We can really allocate you as much capital as you could ever want. But we take it a little bit on a day-to-day basis, and it's always important to build a relationship with one another. So that's going to conclude things for today's webinar. I appreciate everybody jumping in. I'll see you next Tuesday when I'll have an update on the current state of the market. So everybody have a great rest of your day. Make sure to manage your risk, and good luck to everybody who's got positions open into the Fed meeting. We'll see how it plays out.